It's really decision time for Bitcoin now. If you look at it on the 1 hour chart, which is a chart that I'm looking at here, you've just had a little breakout over here, but I'm not really buying this little breakout on the 1 hour chart. I'm much more zooming out onto the 4 hour chart. And I told you yesterday that for me, for this correction to be postponed, I need to see Bitcoin break over this trend line over here. And until we do, I'm not convinced that it's actually going to break out. And in fact, I'm actually a little bit more convinced that we're going to get the breakdown. I'm going to show you why I'm more convinced about the fact that we're going to get the breakdown. But then I'm also going to show you, if we break down, exactly what level I'm going to start buying at. And I'll tell you that there's a major data point that shows me exactly where we're going to land up and where I'm going to start buying if we actually do get the dip. And let me tell you, it's not actually as bad as I thought in the first place. So I really thought we were going to have a massive correction. And after I saw this one data point, I was like, kind of, hold on a second. This is actually the data point that counts. And to be honest, that's where I'm going to start buying. So Thanksgiving Day, let's go, guys. Let's have a great show. Happy Thanksgiving Day if you're celebrating. I mean, I think we've got a lot to be grateful for, or to be thankful for. At least I know I've got a lot to be thankful for, and I think we're probably all sitting in the same boat. I think the first thing that we all have to be thankful for is for Satoshi Nakamoto, for Bitcoin, for this incredible, amazing industry that brings us price gains, brings us dopamine, brings us amazing community, brings us life-changing, and for some people, life-changing money. I mean, just look at this Bitcoin chart. I mean, I was here from 2014, 2015, where Bitcoin was around $328. And you can see that, I mean, we've got so much to be grateful for. Just look at this asset, an asset that started in 2010 at 28 cents. Even if you got in at 2011 at $2.49, 2012 at $12.51. Basically, really, we're here on Thanksgiving, and pretty much no matter when you got into Bitcoin, you've landed up making money. So I think we've got to all be extremely thankful for Bitcoin, for Satoshi, and for everything that this amazing industry brings us, the friendships, the communities, the everything else. I saw this from Dan Moorhead, who landed up buying Bitcoin on the 5th of July, 2013. And he says, I'm going to buy 30,000 Bitcoin this weekend with my personal money. The fund can have this purchase or not, as others wish. Can you imagine buying 30,000 Bitcoin at, what is the price? $65. Can you imagine how much thanks these guys are actually giving today? I mean, I guess the other part of Thanksgiving is if you were holding Solana. If you were holding Solana since last year's Thanksgiving, you're up 700%. If you're holding ETH, you're giving thanks, but you're not giving as much thanks as you should be. You're 50% up. I guess that I'm also thankful for this amazing community. Our growth in the last year has been absolutely incredible. So a big thank you to every single one of you. I'm thankful and I'm grateful to all of you, to my research team, to the people here at Banter that bring these shows every day, the thumbnail team, the SEO team, Hardest, Joss, and everyone that drives. And of course, to you, the most amazing community. Thank you for your support over the last year. I guess I'm also thankful that this is not our president or our president-elect right now. I'm thankful that this is over.
I have to remind you, don't you ever let anybody take your power from you. You have the same power that you did before November 5th.
Oh, shut up. I'm just glad that that's not our president and that we're not in this era, which Mark Andreessen explained here. I want you to hear this.
And the reason it stopped is because basically every crypto founder, every crypto startup, they either got debanked personally and forced out of the industry, or their company got debanked and so it couldn't keep operating, or they got prosecuted, charged, or they got threatened with being charged. This is a fun twist. This is a fun, and the reason it stopped.
So I'm thankful that we dodged a huge bullet there. I think we dodged a massive bullet by getting Trump into power and getting the Democrats out and basically like really allowing this industry to thrive. So I think we have a lot to be thankful for. I mean, I'm also thankful to Bybit. I got to be honest. I'm super thankful to Bybit for leverage. Even though these two trades aren't going very well, my ETH trade is going absolutely amazing. So I'm very thankful to Bybit for leverage. And I'm very thankful to Blowfin for never doing KYCs. So if you want to sign up to Bybit or Blowfin and you want to be trading leverage, there are Black Friday specials, which you can be grateful for. 10% off if you sign up by the end of tomorrow. You get 10% off your trading fees for a year, which is, I think that's an offer that's probably never going to be repeated. So I think if you want to sign up, Bybit or Blowfin, or any of them, but on Bybit or Blowfin doesn't do any KYC. I think this is probably your last chance because there's 24 hours left in this Thanksgiving special. All right, so with that out the way, thank you to everyone. Let's get into the alpha of the show. If you're here for the first time, subscribe. If you've been here before and you're just here for alpha, how this works is you smash the like button. It gives me energy. The more energy I get, the more alpha I part with. And today I've got a lot of alpha for you, and I'm actually bringing on a guest who's also going to bring a lot of alpha. So let's get on the show on the road. I want to show you why I'm not that convinced that this Bitcoin price or that Bitcoin's going to continue to hold this line. I said to you yesterday, what I was looking for is I was looking for Bitcoin to break above this line for my thesis of a correction to be invalidated. It went above the line, but as you can see, it went above the line, and as it went above the line, the volume started to drop. You see, like the volume started to drop and started to drop and started to drop. That shows me that the momentum, or specifically Bitcoin momentum, is not as strong as it needs to be. And so I'm now watching it over here, and I'm still saying that for me, for my thesis of a correction to be invalidated, I need to close above this line, and I need to continue this uptrend. Otherwise, I stay in the camp that we're going to get this slight correction. And the truth is, this chart and this volume chart over here is not the only thing that I'm looking at. I'm looking at a couple of other indicators which are showing me that a correction is slightly more likely than a break upwards. But if we do get a correction, I'm also going to show you exactly where I think the correction price is going to end. And it's not exactly where I thought in the beginning. So I'm looking at the fear and greed. Fear and greed is still very, very high. It's an extreme greed again. And generally, extreme greed, you need to see a cool down in the market, even though the extreme fear and extreme greed can actually continue for quite a while. But then there's another chart. The chart is the USDT dominance chart. And you can see that as the prices of Bitcoin and the market caps go up of the altcoins, basically what happens is USDT becomes a smaller and smaller part of the altcoin market, so to speak, right? And so what you look at there is you look at the USDT dominance versus the total 2 chart. Total 2 shows you how the price of altcoins is going up. And USDT dominance shows you how the increase, or the USDT is as a percentage of all the altcoins, is holding. And this is on a trend line that's been going since 2018. And when the USDT dominance goes up, it means more people are going into USDT, or USDT, which is a fixed number, so to speak, becomes more and more relevant. And now we're on a support line, which basically shows that unless we break below the support line on the first attempt, which would be kind of unlikely because if you look at where we've been since 2018, we haven't been able to break down below this line. It's showing you that there's some kind of correction that's actually potentially coming here. So you can see USDT dominance on that trend line since 2018, and that usually indicates that we're going to get some kind of bounce. You can see these bounces usually come near tops. So if you look at where we touch here, it's usually that we touch these things kind of near a top, and we usually get some kind of correction. Although I don't see a correction being this big. The other data point that I'm looking at is that the long-term holders have actually been selling off some of their Bitcoin. Now, usually these guys sell into long-term tops. Now, I said to you yesterday that the one thing that told me that maybe a correction was going to be postponed is the fact that the funding rates actually weren't too high. And if we looked at the funding rates yesterday, which you look at over here, and by the way, for those of you who don't know what these funding rates are, this is the rates that people are willing to pay to take leverage to buy their favorite coins when they don't have money. So if you want to buy your favorite coins, you don't have money, you can actually take leverage. But to take that leverage, you're actually paying a lending rate, right? Now, in times where the lending rates are normal, you'll see that the shading here is very green. When it gets a little bit heated, it gets more towards the yellow. So you're looking at the yellow and you're looking at the orange. And so what you're starting to notice now is that slight pockets of yellow are starting to come up, which means that it gets a lot more expensive to hold your funding or to hold your derivatives. The more expensive it gets to hold your derivatives or your leverage positions, the more likely you are to close them. And I'll show you as an example, right? I took this ETH trade, which is a monster ETH trade. You can see that I bought 2,300 ETH on leverage. The position total, the position value is $7 million, $6.8 million. And I put about $1 million of margin into this position, which means that I'm borrowing the rest, right? Now, I took this position out about 3 weeks ago, and you can see that I've already paid $113,000 in lending fees to hold this position, right? That's a huge number to pay, right? Now, it looks cool now because I'm in profit now, but if this ETH position goes back, and I go back, if ETH goes back to $3,000 or $2,982, then I would have lost the unrealized profit and loss, but I would have still paid huge funding. And so why I'm showing you this is because when the funding rates go up, and that's the situation which we're seeing here, it becomes super expensive to hold the ETH position. So let me show you as an example. If you go to Bybit over here and you look at the rate at which I'm paying 0.031% to hold this position every 8 hours. So if you go back to CoinGlass, where you can see the funding rates, and you go onto the 1 day, what you realize is that I'm paying on Bybit, so over here, I'm paying 0.09 because it's every 8 hours. So I'm paying 0.03 every 8 hours. So I'm paying 0.09% per day to hold that position, which equates to 33% a year in funding. So what you can see now is that the funding rates are actually quite elevated. Specifically, the funding rates are elevated on ETH right now. And the reason why it's elevated on ETH right now is because it's very much ETH season, right? But generally, you're starting to see quite elevated funding rates, which means that it's becoming really expensive to hold the long positions unless the price is actually going up quite aggressively, which right now it's not doing. So to me, the funding is starting to look elevated. And when the funding starts looking elevated, that's when you normally get some kind of leverage flush, so we can reduce the rates which is leverage, right? Reduce the rates at which you are charged to take leverage. So that's another indicator which is showing me that this correction is a little bit more likely. Then there's another one. It's called Bitcoin miner profit loss sustainability. Generally, when miners are extremely overpaid for the block rewards, then usually we get some kind of correction. So if you look closely here, you can see when the miners were overpaid, in other words, the price of Bitcoin went up relative to the price that it costs to mine a Bitcoin. So for example, if it costs $50,000 to mine a Bitcoin and I'm getting $83,000, I'm making a lot of money mining Bitcoin, right? If it costs $85,000 and the Bitcoin price is $86,000, I'm making a little bit of money. What you can see here is that every time that the miners make too much money relative to the cost of mining Bitcoin, then we get some kind of correction. And that makes sense because remember that the miners have to pay electricity, mining costs, etc., and they compete with other miners to actually mine Bitcoin. And when they do, you want to make sure that the profit is normalized, because when they make too much profit, it encourages other players to come into the market. Now, if you look at where we're at today, you can see it over here in the red line. That shows you that right now there's a mismatch between the price of Bitcoin and the price of mining Bitcoin. And that's so usually when that happens, and I went back all the way back to 2013, and you can kind of see in the big corrections happen when this is very much out of sync. So you can see here they were very, very, very overpaid, massive correction. Here they were very overpaid, massive correction. You can kind of see that every time the big corrections happen, they were massively overpaid. But if you zoom in and you look at the smaller corrections, you can see the same pattern actually applies, just not to the same extent. So you can see that the cost of mining Bitcoin actually has a lot to do with when you're going to get corrections and when you're not going to get corrections. Generally, when the miners make too much money mining Bitcoin, the market comes back to equilibrium, and usually that means that the price of Bitcoin goes down. And so when I look at this metric over here, and you can see there's a little faint red line over here, just like there was over here just before we started going down, and just like there was over here just before we started going down, you can see that this trend is actually one that is actually quite reliable in deciding or seeing when we're going to get a correction, okay? So again, I don't want a correction. In fact, I do want a correction. And the reason why I want a correction is I want the leverage out and I want to continue with alt season. And I know that the market can't continue with alt season when it's been running up so much without some kind of reset. So I want the reset. The big question is, when the reset actually comes, then when are you going to start buying? How bad is this correction, or how bad can this correction actually get? That's what you should be asking yourself. And initially, you know that I tweeted and I said, look, I think that the correction goes down all the way down to 80,000 or 77,000. And the reason why I said that was because that's the CME gap, and history tells me, and this is all the CME gaps in history, or that we could find in the last couple of years, you can see that every single one of the CME gaps eventually gets closed. The thing is that it can take a long time for a CME gap to close. So this one took from July to the following year, April, to actually close, but eventually it closed. Now, for those of you who don't know what the CME gap is, this is the Chicago Mercantile Exchange. And what this is, it's a futures exchange where people buy Bitcoin futures. That's where the Bitcoin futures are listed, CME Bitcoin futures. But this is closed on weekends. And sometimes when we close on a Friday, the Bitcoin price is at one part, and we open up on a Sunday and we open up at another cost. And that creates a gap between where the CME closed and where the CME opens. Now, historically, these gaps have always been filled. But look, sometimes you can go from 2021 to mid-2022. So it takes a long time to close CME gaps. So initially I thought, okay, maybe the CME gap's going to close to 77 or 85. But then that seems a bit aggressive. Then I thought, okay, hold on. Maybe what we'll do is we will test the previous all-time high, because that's the next level on the charts. There's no other levels on the charts here. So, when you want to see a correction, you say, okay, well, where's the next support level? Well, kind of like next all-time high is the support level, right? Problem is, as Eric Crown rightly said, he said, if you look at history and you look at the election cycles, when you break the previous all-time high and you go into price discovery, actually, the price never comes back there. So you can see that in history, the price never ever came back to the election cycle or the all-time high that was broken just after elections. So maybe that's not a good theory. But then one of our researchers actually stumbled on something, and this is probably worth talking about. So remember I said to you that Bitcoin is actually a function of the mining costs. And probably the most accurate measure of long-term Bitcoin price is actually how much it actually costs to produce a Bitcoin. Because the more it costs to produce a Bitcoin, the higher the price has to be. And I showed you that right now the miners are being a little bit overpaid. They're a little bit too much profitability, and that usually causes a correction. Anyway, so we found this piece of data, which is I think an amazing piece of data which is worth looking at. This is a chart that shows the price to mine Bitcoin versus the price of Bitcoin. So the blue line, this turquoise line over here, is the price of mining a Bitcoin, the price of production of one Bitcoin. And the yellow line, or the orange line, is the price of actual Bitcoin. Okay, so why is this relevant? Because obviously the miners the price of Bitcoin has to be, in general, over a long period of time, the price of Bitcoin has to be higher than the production cost. Otherwise, all miners would lose money, and then all miners would go insolvent, and Bitcoin wouldn't exist, right? But you can see at times the price of Bitcoin actually breaks below the mining cost for a short period of time, or for sometimes maybe slightly longer. And the reason why it does that is to shake out the miners that are not being efficient and make the miners that are being efficient bigger miners. That's basically how the algorithm's set up. Now, what you realize is that today, the average price of mining a Bitcoin is 88,125, and the price of Bitcoin is 95,238, which means that miners are earning about $7,000 for every Bitcoin that they mine. That's basically what's happening. So every 10 minutes, a new block is mined. The block reward is 3.25 Bitcoin right now, and they get 3.25 Bitcoin. And so the average cost of mining a single Bitcoin right now is $88,125. What you can see though is that there is a pattern. If you study this line over here, what you'll realize is that there's actually a pattern that emerges. And you can see this pattern both in 2016 and in 2020 in the 2020 bull run. So let's actually look at the thing. I wonder if you can actually zoom in here. Can you? You can. Okay, amazing. So let's actually look at the data here. What the data shows you here is that once Bitcoin breaks out into bull market territory, and specifically where it broke out on the 4th of November, and the price of Bitcoin broke above the price of production of a Bitcoin. So you can see over here, the price of Bitcoin, which is the orange line, broke above the price of production on a Bitcoin. It usually never, ever, ever goes anywhere near the price of production until the end of the bull market. So again, let's just quickly look at it. Beginning of the elections were somewhere over here. We went into price discovery here in November, exactly like we are today. And from that point, the price of Bitcoin never came anywhere near the price of production of a Bitcoin until the end of the bull market when Luna collapsed, 25th of June, 2022, that whole thing. That was one. So I went back and I tested this thesis again. And I said, okay, let's look at 2016, 2017. Again, once we broke the all-time high over here, the price went above the price of production on a Bitcoin, and it never, ever, ever came back. It never, ever, ever came back until the end of the bull market, which was 2018. So let's just quickly get a Bitcoin chart just so we can quickly look at the BTC USD. And we can just quickly correlate the times here. So let's just go on to a weekly. And then we can quickly look at the times. I think this is super important. So let's look over here. The first time that Bitcoin went over in 2020, convincingly, was around the 25th of November. So 25th of November, 2020 is this period over here. That's where we were. And then we went parabolic, and it never came back until this period over here, where the price of Bitcoin went back down to 31,000, which is 31st May 2022. So 31st May 2022 is here. That's where it is. So basically what they're saying is that the price of Bitcoin never, ever, ever goes below the price of production during the rampant part of the actual bull market. Now, if we look at the price of production of Bitcoin, you can see that today the price of production on Bitcoin is around $88,000. And so the idea to see whether or not we're going to get a correction is to say, okay, we're definitely going to get a correction at some point. But if this thesis were to hold true, then we're not going to go below the $88,125 level. And so if this holds, then we kind of say to ourselves, look, if it goes under 90,000 or if it goes to 88,000, probably chances are we can actually start buying, unless we think that in this bull market, this relationship between the mining cost of Bitcoin and the production cost of Bitcoin and the price of Bitcoin ain't going to hold. Which, I mean, again, you can only use history as an indicator. And history is telling us that in the last two bull markets, we've got exactly the same pattern. You can see it over here, and you can see it again over here. And so, effectively, what I'm looking at is I'm saying right now the pricing cost is 88,125. If we do get a correction and we don't break the pricing cost of Bitcoin, I mean, it's a $6,000-7,000 correction. It's nothing to it. Although, what you do have to do is you have to keep watching the price of the average mining cost, because this average mining cost changes, right? So like this one I think was updated a week ago, and it was updated to $84,000. Let's just see if we can get a ratio line here. I don't think we can. Yeah, so I don't think we can get a ratio, but I'll export onto Excel and I'll actually build us a spreadsheet. But what you can see is that there is a huge relationship between the price of Bitcoin and the price of mining Bitcoin. And it looks like we've just broken up here in November. If you look at this pattern, it's uncanny. It's like this is the period where the blue line is slightly over. We had exactly the same period over here. And again, we had the equal lines over here. And it looks like we're very much in that period over here. And if we break up now, then chances are it's not going to come back to below the production cost of Bitcoin. So that's where I think we'll go. If we actually get that. You can see it was tweeted off the Crypto Banter account. 14th of November 2020 is exactly when this happened. So, I mean, you can kind of see that that's something that we might actually be following. So with that in mind, I think that we could be having an amazing December. I think we might get a little bit of a flush out, but then after that, we probably will have an amazing December. Again, I'm using old data as the indicator here. Old data tells me that in both 2016 and 2020, we had a very good November and a very, very good December. 2017, we had a very good November and a very good December. And again, election year 2020, we had a very good November and a very good December. So if we follow this trend, we could say something like, we've had a good November. If we follow this trend, we just get another 36% in December or somewhere around there. We could have an amazing, amazing, amazing December. And I mean, I read these tweets, which are anecdotal, but probably worth read. He said, November 2020, Bitcoin started at 13,500, surged to 19,500, dropped to 16,200, consolidated and broke 20,000 in December. November 2024, we started at 69,000. We surged to 99,000. I mean, hard to believe that we were at 69,000 just a few days ago. 28 days ago. We dropped to 91,000 so far. And then maybe we'll just break 100 in December and history will kind of repeat itself. Robert Leshner says, we broke 100K on November. We broke 1,000 on November 28th. We broke 10,000 on November 28th. If Bitcoin has to break 100,000 on November 28th, wouldn't that be a simulation? So I think it's going to be the best month ever if you're in Bitcoin. So again, I think we've got a lot to be thankful for. A lot to be thankful for. I think another thing that we need to be thankful for specifically is that our ETH play is actually playing out. I know we've been calling ETH for quite a while. Specifically, if you are in frontrunners, we've been calling ETH for a long time. This was a tweet from a week ago when the ETH play started. I said, look, guys, I took 3 longs to play this in case it happens, Curve, Velodrome, and I bought ETH options. And I actually want to show you what I did there in a second. But I do want to remind you guys very quickly. We're having a special on Frontrunner. It's a Black Friday special. It will never be repeated again. You got 24 hours to get this special. 50% off if you sign up to Frontrunners. We are having amazing calls in Frontrunners. I'm going to try and find you some of the calls that we've got. There's so many of them. Here's one over here. Here's another one over here. The guys were calling Thena, and they called Thena at 18 cents. I think there's a few Frontrunners that actually did a 10x on Thena. They literally had a 10x on a spot trade. Join Frontrunners. You've got 24 hours left of this Black Friday's 50% special. Promise you it's the best decision you'll make in this bull market. Anyway, going back to it, as I was saying, I'm excited that our ETH calls have actually been playing out. And if you look, yesterday we did a show on ETH, the day before we did a show on ETH. And if you look at what's actually running right now, you're getting all these ETH betas actually running. So you got ENS up 37.41%. ENS is the Ethereum naming service. It's the .eth domains. You've got Athena exploding. You know, Athena's paying 29% yield at the moment. It's absolutely crazy what's going on. And so we're starting to get like this huge ETH narrative. As Brian Armstrong says, he says you've got Base, which is helping ETH scale. You've got ENS, which is providing identity. You've got USDC, which is a stable medium exchange. You've got Athena USDE, and you've got Smart Wallet. So Ethereum is very much leading the charge here. I saw this stat over here, which said that there's about $17 billion that has entered USDT or the crypto ecosystem since November. And I'll show you where that comes from. So since November, we've had $17 billion actually into the market, of which like 95% or 97% was actually printed on ETH, which is absolutely amazing. So ETH looks like this ETH run is actually continuing. You can see it in the ETF flows, where we've had another day of $100 million. So it looks like money stopped flowing out of the ETH ETFs and started to flow back. And you can also see it in TradFi. So TradFi has gone crazy, and all they want now is they want to get their hands onto more and more ETH. So we're seeing a massive ETH rotation. All the ETH metrics are starting to look good because of the ETH rotation. And so the only metric that is not looking good for ETH is actually the sentiment metric. So the one thing you're not seeing on your timelines is it's ETH season, it's ETH season, it's ETH season. Someone says ETH was up 10% today. It just hit a 5-month high. The entire timeline is eerily silent, which means that most people are actually still sidelined on ETH. So I still think on ETH, it's still early. And that's why, to be honest, if I do get the itch, and I do get the itch because I'm human, just like you're human, and I do get the itch sometimes to trade, right? And problem is when when I see the markets going up and I want to FOMO into something, I always remind myself, no, there's going to be a correction, but I still get that FOMO. And so what I do when I get that FOMO is I actually just buy ETH futures, not futures, options. And the reason why I buy options is because, let me just get out of it. So the reason why I buy options is because I can buy long dated options. So basically, I'm trying to show you how it works. I can take a position, taking a bet on the price of ETH in June next year. And if I want to take a position that ETH's going to be above where it is today, so let's say above 3,600, I'm basically paying just so I'm putting down like $659. That's it. That's what I'm basically putting down, $659 to take that option. So whenever I get the urge to FOMO in, then effectively what I'm going to do is I'm just going to keep buying these ETH options. And again, the reason why I'm so excited about ETH is because ETH is the link to the alt season. So it's going to go Bitcoin, ETH, alt season. We're going to start going back into this kind of altcoin cycle. So for me, the most exciting thing right now, I'm not excited about ETH and ETH tech, but I am excited. I'm excited about ETH breaking all-time high because that's going to usher in the alt season. You can see when you look at the funding rates, just look at the funding rates over here. You can see right now the demand. This is actually a good lesson for you guys. Is you look at the demand, look at the funding rates on ETH versus the funding rates on Solana. So funding rate on Solana on Bybit is 10.95%, but funding rate on ETH is 32%, which means that more people right now are actually aping into Solana, into ETH than in Solana. That kind of shows you a little bit of where the rotation is going to be. So that's another thing that I'm looking at. I'm keeping my eyes on this ETH ecosystem. We did make some plays yesterday. I've got my position in ENS. I did give you guys a whole list. You can go watch yesterday's show. It's all there. One other thing that I'm keeping my eyes on, but not something that I think we should spend too much time talking about, is tomorrow we've got the launch of Hyperliquid. For those of you who don't know what Hyperliquid is a perpetuals DEX. Reason why I'm so excited about perpetuals DEX is because what we're seeing a lot of people move onto chain now. So a lot of people used to trade on centralized exchanges. They're now moving directly onto chain. We see it in two metrics. One is we see it on this metrics when we look at the DEX to SEX ratio, but also we see it here where the Phantom wallet has become the number 2 app on the utility store. So you can kind of see the Coinbase is going up and Phantom wallet is going up, which means that in this bull market, you're getting two types of traders. You're getting the newbies who are coming onto centralized exchanges, but then they also go onto Phantom because they want to trade things like meme coins and trade things like decentralized tokens on decentralized platforms, right? And so one of the biggest decentralized perpetuals DEX is actually launching tomorrow. It's called Hyperliquid. The thing with Hyperliquid is it gives you like a centralized exchange type trading experience on a decentralized exchange where you control the wallet. And what you can see is that it's a very fast, seamless experience because they actually run it on their own chain. So it launches tomorrow. The airdrop is also happening tomorrow. I'm expecting a valuation of around $3 billion. Chances are that if it goes anywhere below $2 billion, it's going to be a huge buy. And if it goes above $5 billion, probably it's a big sell. I wouldn't be shorting this thing, but I would be looking to buy this thing tomorrow. I think there's going to be a lot of hype tomorrow around this TGE. So I think let's just keep an eye open for it. Yeah, it depends on. I think there's going to be a lot of hype around this one, but we'll guide you through what the best way to actually trade this is. Alrighty, listen, before we go, I've got a couple of other bits of alpha for you. The first thing is, as I mentioned, I'm extremely grateful to all of you, and I'm extremely grateful to my research team for helping me put this whole thing together. Now, if you want to be a part of the research team, go to the description in the show here, and there is a form over here that you would need to fill in. The form looks something like this. And come and join our research team. We're looking for people who've been around for at least 3 years. So if you haven't been here since 2021, please don't apply. You got to watch at least 3 crypto shows a day. You got to be full-time obsessed, and you got to be able to work European or Singapore hours. If you want to join the research team, be part of probably the fastest growing business in crypto right now, jump in and do this. The other thing is, I'm reminding you again, guys, it's Black Friday. There are 1,000,001 specials which you probably will never ever see again, and this is your opportunity to get them. I'm going to show you some of them right now. So number one, if you want a Ledger Flex, which is this ledger over here, you get it with $70 of Bitcoin actually loaded onto it. There's a link over here to get that Black Friday special over here.
Ryan, it's not loaded onto it. You
Oh, you get a voucher okay, so I thought it came loaded, but you get a voucher for $70 when you actually get it. So there is a link over here. Just click on that link over here. The next thing is that it is, you know Dylan, right? Everyone knows Dylan, right? Here's Dylan. You all know Dylan? Hello, bro.
Hello.
Very excited, sir. So Dylan's launched his own trading course. Now, Dylan here is one of our more technical traders, and he's a trader that uses algos and indicators to actually help him trade. Dylan, just give us a little taste of what we can expect if we come to your free course, the free course that you are doing. The free course that you're doing.
Putting me on the spot here, guys. Look, well, essentially, for those of you that have seen what I do, if you're not a trader or you don't look at charts too much, it can be a little bit confusing. So what I've done for you guys in the super accelerated course is, number one, give you a basic understanding of TA, how I do my hot zones, how I get all the action going. Then I've tied that in to some indicators, because some of you guys know that I love to trade using indicators as well. So I've built the indicators into that to show you how you can tie in indicators with regular TA. And then to top all that off, we've got an automated system for you guys. So you can actually just set up bots using the indicators, and it's going to all automatically do all this stuff for you. So there's something for everybody here. Something for the guys that just want to plug
so
and play.
So show us some of the indicators and what the indicators have actually told us about buying. Like what are you guys currently trading, or what trades are you currently in?
We caught a few yesterday, and I mean, for those of you that watch me, I do a lot of shorter time frame trading. So you mustn't get the wrong impression. Yeah, I trade 1 hour, I trade 4 hour, I trade weekly charts and everything like that. So this is Bitcoin on the 1 hour that we're watching. And yeah, I must say, I agree with Run at the moment that we are a little bit bearish on BTC, but I just want to show you the simple little oscillator that we're using here at the moment. This is from Chart Prime. And this thing's calling bottoms, it's calling tops of moves. It's giving us confluence on a lot of our setups. So you can see in this simple example here, we had Bitcoin dropping into one of my hot zones here, and look at our oscillator printing some divergence there, and then just teeing us up for that nice little move. So we're using that type of stuff. And yesterday we caught a ponky move, also using something very similar. We've just used our oscillator, keeping it super simple here. The oscillator printed a short little reversal there for us into our hot zone. Now we're getting a move there. And then we obviously got way more advanced stuff. We're using things like quantum bands and all these detailed things that you can dive into, including candle structures and all these things that it automatically figures out for you. So you don't have to learn about candles. It just gives them to you anyway and tells you when things are bullish or bearish. From that perspective, it tells you when to take profit. It tells you when you can enter. No, it's an absolute banger. So can I show you the automation?
Yeah, show me the automation. Why not? Yeah, let me switch.
We've got this back tester running now, developed specifically for this course. Now, what we've done, because this stuff can be quite complicated, is we've already preset 6 strategies for you guys. So we've got this one here in front of me is the Sol Bull and Bear 1 hour chart strategy that you plug into a bot. So this thing's taking longs, it's taking shorts, it's doing all these things. And you can see the profitability rate is 62% at the moment. And with the variables that I've plugged in here, the average trade makes $197. So you'll have the power to change the amounts and the things you use, but the presets have been built for you guys to keep it as simple as possible. And you can play around with all of these things. And one of my favorites is the Pussy bot that we've been developing that only likes to trade.
Sorry, the what?
The Pussy bot. It trades Popcat, it trades Mew, it trades the cats. Okay, and we're going to get the dog pound out as well. We're going to trade the dogs. But yeah, the stuff's all happening here for you guys. Super excited.
Okay, so guys, if this all sounded like Chinese to you, because to me it sounded like Chinese, right? Dylan is doing this is all Chinese to me. Indicators. Dylan has a free course. You can go and do the free course. He has the course over here. Just click here, start the course. The course is absolutely free. If you want to buy the indicators, there are Black Friday specials which you can buy. You can get the combination of the course and the indicators. The course starts now. When? Monday. When does it start?
It's live. It's live.
Oh, it's amazing.
Yeah.
Amazing.
Yeah. We're ready to go. Our community's active already as well.
And when is the first workshop, sir?
Next week, the 7th, I believe. It's coming in hot. Yeah, coming in hot.
Okay, so amazing. So we now have that. If you guys want it, there's a Black Friday special. The course, as I said, is absolutely free. Just click over here. If you want the indicators, there's this Black Friday special. My suggestion is get them all before the end of the Black Friday special because you're saving like 70%. With that in mind, guys, I will see you guys again tomorrow. I'm reminding you that there's 24 hours left to get front runners. If you don't get in the next 24 hours, and if you do, you're going to get into front runners and the 𝗙𝗥𝗢𝗡𝗧, which is where we trade meme coins. If you don't, in 24 hours that the waiting list is going to get closed, and then we'll see you again when the waiting list opens. I'll see you guys again tomorrow. Once again, happy Thanksgiving and trade well, my friends.